best cash savings strategy account before third quarter 2025. So you see recently, interest rates have taken another beating down again. So all these low risk capital guaranteed assets are going to go down in terms of their interest and their returns. We're talking about T-bills now below 2%, SSB, even a 10-year yield is below 2% now, and fixed deposits, don't even talk about it. Even DBS, which was giving like 2.45% the last month, no more already. Okay, you cannot find anymore. Now all below 2%. And then you realize that all these options are all below 2.5% per annum, which is even lower than the CPF OA interest rates. So the way you think about it, you might as well pay back your home loan if you have a mortgage, right? Because instead of using OA, which is giving you 2.5% per annum interest, you can use it to pay down your mortgage and then get a risk-free 2.5%, which is already higher than all your other capital guarantee assets like T-bill and SSB. But then some of you will ask, how about if I have idle cash, okay, and I don't want to lock inside CPF? Then you have to accept the fact that, your cash will get lower returns in this low interest rate environment, because ultimately they are lower risk, and low risk comes with lower expected returns. Now, if you want to move one step higher, we still have SDIC bank accounts that, if you jump through a few hoops, you can get slightly higher interest rates. We are looking at the likes of OCBC 360, giving you 2.45% per annum. And then for UOB, it's giving you 2.5% per annum. And these two accounts used to be one of the best high interest savings accounts, but they are all falling below 3% now already. So is it still worth the effort or not? I don't know. But if you want the better accounts, right, I would say that HSBC Everyday Global account giving you up to 3.25% per annum if you fulfill the Everyday Plus bonus interest campaign plus whatever incremental fresh funds, right? I think that is still a very good option for liquid funds. Like you want immediate access, which is what I'm still putting part of it in the HSBC EGA. Then, if you want a better return, you can look at Standard Chartered Bonus Saver, which is giving you up to 5.55% if you fulfill 3 criteria, which is salary credit $3,000, spend $1,000 on the Bonus Saver card, and the last one being investment of at least 20,000 Singapore dollars, which is what I did for this month in September. Because 5.55% guaranteed, I think is still not bad. In fact, I cannot say not bad, it's super good already. Because other bank accounts, even UOB one is giving you less than 3% per annum. So I think they also have some new user welcome bonus sign up rewards. So you can check the link in the description if you want to sign up for the Bonus Saver account with my code. But the thing is, all these rates and returns are going to change with time. And with lower interest rates, probably the Fed is going to announce this coming Fed meeting, FOMC meeting, we're going to see like other banks going to drop their returns on their high interest savings accounts. And the thing about high interest savings account is that there is a lot of hoops to jump through. There are so many criteria to fulfill. And up to a certain point in time, you realize that you can only keep the first 100, 150K. Then what about those funds above that? Because there's going to be a cap on the bonus interest. So I think these high interest savings accounts are still good places for you to park your cash in the meantime, because you have immediate liquidity. It is SDIC insured, which means it's capital guaranteed. And I still keep some of these cash positions because of immediate liquidity to pay my bills, to fund my investments and other cash needs when needed. And most importantly, there's no withdrawal processing time, because if you were to invest, there may be some processing time involved, up to a week. But if you think about it, can you wait up to a week? Because some of you may not really need the extra liquidity. You have enough funds for liquidity, like immediate needs one. If you can wait at least 1 week processing time, then I will have a better suggestion, one of which is the Longbridge Cash Plus. This is where you can generate returns on your idle cash funds. And the underlying fund is called the iFast SGD Liquidity Fund, which is giving you around 2+% per annum as of the recording date. So you can refer to this screenshot right here. And in any case, if you feel that 2+% is not really good enough for you, do you know that new to Longbridge users, they can get 2 times 6% per annum interest boost coupon, and that can boost you up to 12% per annum. All you need to do is to deposit 2,000 Singapore dollars upon signing up with my link, and you can get an additional $18 cash coupon plus that additional 6% interest boost coupon. The normal sign up, they only give you 6% per annum boost coupon. But that's not all, because if you make 3 buy trades of stocks or ETFs, and you hold for a period of 30 days, you'll get some fractional shares. For example, at the $2,000 funding tier, you'll get half an NVIDIA share if you just hold the funds for 30 days, do not withdraw. And that is already worth around 110 Singapore dollars. Of course, there are higher tier of rewards if you can qualify for the deposit tier and more buy trades, but that will ultimately require more effort. So please read the terms and conditions on how you can qualify for it. So what I like about Longbridge for new users who are new to investing is that They also provide commission-free trades plus zero platform fees for a limited time period. So it's really suitable for those of you who just want the lowest cost, the minimal cost to start investing, so you don't lose out too much on the fees. Yeah, just get your hands started. Yeah, just buy a few trades and qualify for the rewards. That's simple. And coupled with the 2 times 6% interest boost coupon, I think it is very good head start really. You really start to profit. So to sign up for Longbridge, you can use my exclusive link here or scan the QR code right here and get started investing with Longbridge today. But I think I want to cover something more while waiting for my shuttle bus. I want to talk about short-term bond funds because these are also funds that you can buy on the Longbridge platform. Now, for those who don't know, right, bond funds is a diversified portfolio of multiple bonds which lends money to companies or government, so they have to pay regular interest and return capital at maturity. So that's the definition. It's like a borrowing. So like instead of buying one single bond, you buy a portfolio of bonds. So it's slightly more diversified, and you can see as lower risk compared to a single concentrated bond. So for my example, right, I've been buying Lion Global Short Duration Bond Fund on Longbridge since 23rd of July, and I even documented my results investing for more than 1+ months, close to 2 months now. So on the $10,000 capital, I gained around $78 of NAV, net asset value appreciation, and that's over a period of 43 days. So you can see I calculated the CAGR compounded annual growth rate to be around 6.7% per annum. Of course, I must let you know that past performance is not the guarantee of future results. So don't take it as financial advice because my performance may be greatly different from yours depending on the timing. And I don't know your situation, whether you are fit for this product, because everyone should go and read the fact sheet first to see whether you are really suitable and you really know what you are investing in, especially for investment products like this, which is not capital guaranteed at all. So you're coming from a capital guaranteed position like with T-bills, SSB, all this, right? Or the cash high interest savings account, yeah, something different. If you want to invest, you must be prepared to take risks, and risk comes with the potential to make capital losses and of course gains. And it's not always a bit of roses, because if you look at my returns, right, for Lion Global Short Duration Bond Fund, there were days where it was a flat return, which means zero, or there were even days that it was negative. Yeah, so you cannot always think that market will go up forever, and there will be days that it will go down. But what is more important is that the number of up days are more than the down days. So that's when you can profit and make a gain. So if you really ask me my honest opinion right now in the low interest environment, I would say that holding cash is really not a good strategy because your returns, your interest rates, whatever platforms are just going to get lower and lower. And you'll be forced to think about alternatives. Okay, my bus come already, I talk later. So I was saying, right, hold cash is not a good strategy, but you cannot go the opposite end of the spectrum, right? Like you want to invest, you don't even know your risk appetite, okay? And investing in equities and stocks is really considered high risk really. You start from a zero risk environment like cash, SSB, T-bills, and then you want to jump to the higher end. You need to step up one, progressive training, right? Like they call it. So you cannot just one step jump from it. Therefore, you always have to assess your own risk appetite because low risk to high risk, there must be something in the middle, right? Consider middle risk. And that's why I really try to use short-term bond funds. It's somewhere in the middle, right? It's not as high risk as stocks, but it's definitely slightly higher risk than all your capital guaranteed assets. Then if you want slightly lower risk than bond funds, you have the Longbridge Cash Plus. All these kind of money market funds, liquidity funds, they are considered relatively safer in the type of asset they invest in. Yeah, so you need to go up the spectrum. So you have like low risk cash assets or T-bills. Then you have money market funds or liquidity funds. Then you have bond funds. Then next up, you can step up to equity. So step by step, you don't go from level 1 to level 4 immediately. Because in the middle, you have level 2 and level 3. Therefore, if you haven't really started to invest yet, I would say that go and start reading up on investments. You don't have to start like picking your own stocks or read all these financial reports. Slowly, you start with Longbridge first, zero cost. And you buy a few trades, get the rewards. Then you slowly read up on all these bond funds and all this stuff because it's beneficial for you. In low interest rate environment, we cannot really keep depending on interest and all these guaranteed returns. And the way to invest for the long term is to buy and hold assets at a comfortable level and regular dollar cost average into the market, which you can do so to invest in the long term because we are not trading. Okay, we are not going buy no sell high. Okay, we just want to hold these assets for as long as you can with great conviction, and that's how we can prosper in the stock and equity market. Yeah, so that's how you really build wealth for the long term. Step by step, you must really learn how to invest, even if you're not willing to. Otherwise, your returns will just get eaten up by inflation. And if you really want a step-by-step guide, I already published a previous video on how to buy short-term bond funds on Longbridge so that you can also create your income stream. See you there.